Hello, okay, mga kaibigan at mga followers. Magandang araw ulit. Ito na ang part 2 no, ng ating financial accounting for the accounts receivable and notes receivable. No? Problem solving session. In the first part ng ating financial accounting session, we have already discussed the uh, all about accounts receivable, no? More particularly dito na ating binigyan pansin or what we have focused on are the write-off and the recovery of accounts receivable, the initial recognition of the accounts, no? At this point, no? At this point, we will be now discussing all about notes receivable. We will just be having a sort of a problem solving session. We have prepared a set of problem to uh, solve and to analyze so that we can complete this whole session ng ating accounts receivable and notes receivable session. So, again, the same with the accounts receivable, no? We will also be focusing on the recognition of the note receivable and the presentation to the balance sheet as well as the various journal entries. So, before we move on, lagi naman natin yung sinasabi, please, if you're new in this channel, please like, share, and subscribe so that we can have a more notification for future videos. No? Okay, let's move on. Look at the problem. Okay, this is the problem that we will be uh, dealing with. Okay, this is the first one. No? Allure Company sold an equipment with a carrying amount of 800,000, receiving non-interest bearing note due in 3 years with a face amount of 1 million. There is no established market value for the equipment. The interest rate on similar obligation is estimated at 12%. The present value of one at 12% for these periods is 0.712. Now, the question is, what amount should be reported as gain or loss on the sale of equipment and the interest income for the first year? So, we have 4 choices here, ano? So, the best way for us to know kung ano talaga ang magiging answer sa ating choices ay we have to solve them. No? We will show you how to solve it and to arrive at the correct answer. Okay? So, let's start. No? Sa ating solution, I will be showing to you how I made the solution for this. Okay? Ang sabi doon sa problem, there was a notes, no, receivable, considering na the entity sold an equipment, no. This is not a merchandise, actually it is a sale of non-cash asset, no, equipment. So the equipment had a carrying amount of 800,000, but the buyer issued a non-interest bearing note for 3 years, with a face amount of 1 million pesos. Okay, please take note of the classification of the note. This is a non-interest bearing note. Okay, so ulitin natin, we will just repeat the data since there was no established market value on the equipment. So the best basis we can have is the uh, present value of the notes receivable. So we can compute the present value of the note receivable by using the effective rate of interest, which is the 12%. So the present value of 1 at 12% for 3 periods is 0.712. Actually, this is a one-time payment. No, one-time payment. That's why it is a present value of 1. Okay, so the question is how much is the gain or loss on the sale of equipment and also the interest income for the first year, no? Kaya as we go back, ang ating naging approach, we establish the face amount of the note receivable, and we just have to multiply it by the present value of 1, which is the 0.712. So the present value of the purchase is 712,000. Now the difference of 288,000 from the 1 million is considered as the unearned income. So that is tantamount to a what we call a discount, no? Since the present value of the note receivable is lower than the face amount, no, this unearned income is also the known as the discount on notes receivable. So for this particular problem, we may call it unearned income. Now, so let us do the entry. The entry for this sale, so that we can have it in the books, is this. Okay, note receivable of 1 million pesos, no? And the equipment, we will be crediting the equipment as well as the corresponding unearned interest of 288,000. And if we will compare it, no, versus the face amount of the note receivable, no, there is a loss on sale. The difference between the carrying amount of the equipment and the proceeds or the present value of the transaction is recognized as a loss, as what we have here in the computation. So yes, the carrying amount of the equipment will be 800,000 because it is stated in the problem, no? 800,000. So versus the present value of the note receivable, which is the purchase price, no? The present value of the note will be considered as the purchase price of the equipment. So there was a loss on sale of the equipment. So we were able to answer a sort of the requirement. So let us see. Okay, there were items which looks familiar, ano? So we will see other information. We have the loss on sale as 88,000. Okay, and the other question was, what will be the interest income? Okay, so let us see what will be the interest income. Let us see the computation. So the interest income is going to be the carrying amount, the present value of the note multiplied by its effective rate of interest for the first year, and it resulted to 85,440. Okay, so we arrive at the answers. Loss on sale 88,000, and the interest income will be 85,440. So it's going to be letter B. So let us move on to the second question. No? On December 31, 2013, Robial Company received 1 million notes receivable from customers in exchange for services rendered. On both notes, interest is calculated on the outstanding principal balance at the annual rate of 3% and payable at maturity. The note from Zeta Company, made under customary trade terms, is due in 9 months, and the note from Yola Company is due in 5 years. The market interest rate for similar notes on December 31, 2013 was 8%. The present value of one due in 9 months is 0.944, and the present value of one due in 5 years is 0.08. At what amount should these two notes receivable be reported in the December 31, 2013 statement of financial position? So we have some choices here. So let us solve the problem so that we can arrive at the correct answer. Okay, so for the next problem, let us see our solution, no? And it goes like this. Zeta notes receivable 944 and Yola notes receivable is 680, no? 944,000 and 680,000. So how come we arrive at this amount, ano? So let us see. Since there are present value factor, in this particular problem, it's going to be so easy for us to know the valuation. The question here is, at what amount should these two notes receivable be reported at December 31, 2013 financial position? So we have here 944 for the Zeta note receivable, and the 0.68 0.68 for Yola. So that's how we arrive at the answer. We just multiplied it by the present value of one in their respective periods, 944 and 680. So that's how we recognize note receivable, and also that's how we will present it to the balance sheet, as part of the, well, it depends, like in the case of Zeta, which is at least in 5 or rather 9 months, so it's going to be a current note receivable compared to the other one, which is for Yola note receivable is going to be a non-current notes, or non-current notes receivable, for that matter. Okay, so we solved that. Now the answer is letter A, 944,000 and 680,000. Okay, so the entry will just show you how we will record it in the journal. So debit note receivable 2 million, because the face amount of the note receivable is 1 million each, so 2 million, and we will give the total amount of the present value, the total amount of the present value of these two note receivable, the total is going to be 1,624,000, and the difference again is going to be an unearned interest that will be amortized, all over the uh, period, no, in the uh, period involved in this note receivable, up to the settlement, no, at the maturity of these notes receivable. Okay, so that will be the journal entry. Okay, so let's do the next one. Okay, let's see the next one here. Okay, this is going to be series of questions. The next one, Persevere Company is a dealer in equipment. On December 31, 2013, the entity sold an equipment in exchange for a non-interest-bearing note requiring 5 annual payments of 500,000. The first payment was made on December 31, 2014. Okay, so the market interest rate for similar notes was 8%. The relevant present value factors are present value of 1 for 5 periods is 0.68. The present value of an annuity of 1 at 8% for 5 periods is 3.99. In the 31 of December, no, 2013, statement of financial position, what is the carrying amount of the notes receivable? Number 2, what amount of interest income should be reported in 2014? This is the next year, after next year. Okay, the first question was 2013, and the next the first question was 2013 and the second question was 2014. And the last question, what is the carrying amount of the note receivable on December 31, 2014? Okay, we'll just show you how we will treat this type of problem. Okay, we'll just show you the solution here, and it's going to be like this. Okay, the carrying amount of the note receivable is 500,000 multiplied by the present value of annuity. We will use the present value of annuity in how many number of years? That is 5 periods, 5 years, 5 annual payment of 500,000. Please take note, the payment is going to be, the very first payment is going to be made in the next year, in the coming year, after 2013. That's why we consider it. Okay, so 1.995, okay, 1,995,000. So let us see the entries. Okay. Okay. The note receivable will be valued at 2,500,000. That is 5 times of 500,000, 2,500,000. So, again, we will reflect the sale at 1,995,000, as the present value of the sale. Okay, so the difference is 505,000 unearned interest. Okay, so the next one, the question is, what's going to be the interest income in 2014? Okay, since the very first payment is going to be on the next year after 2013, the coming year 2014 for that matter, is we will still use the 1.995 or 1,995,000 and multiplied by 8%. So the interest is going to be 1,596,000. Okay, so since this is another version of what we call the uh, discount on note receivable. No, it is a discount. We have to amortize it. No, the amortization process is uh, we will recognize the income, for the all over the years covered up to maturity. So the first year, from so, 13 to 2014, the carrying amount is going to be 2,154,600 because the 1,995,000, which was the carrying amount, is already uh, amortized. And since the amortization is uh, for the amortization of the discount, it tends to increase the carrying amount of the note receivable from 1,995,000 plus 1,596,600, which was the recognized income. We will add it to the previous carrying amount. So at the end of 2014, 2014, it's going to be 2,154,600, which is going to be the carrying amount of the notes receivable. So let us see. So the first question was the carrying amount of the note receivable in 2013. So our answer is 1.995, 1,995,000. So it's going to be letter B. Number 2, what amount of interest income should be reported for 2014? Our answer is 159,600 because we will use as the basis is 1,995,000 multiplied by 8%. So 159,600, which is letter C. And number 3 question, what is the carrying amount? Our answer is 2,154,600. Okay, so the answer is letter B. So it's going to be quite easy for us to answer this type of question since we know how are we going to how we will treat this type of problem, and we are aware of how to use this data being supplied to us by the problem. It's going to be a quite simple problem for us. We answered all the 3 questions, and we also supplied the correct journal entries. So for this session, for this note receivable, we believe that we have given you the correct procedures and a sort of an information, and as I always say, the techniques and the procedures were given to you, and hopefully it's going to be useful for you in your coming problem solving in your school, and especially during your board exam probably. So for now, I would like to say goodbye, and as I always say, keep safe, and see you again for the next videos, and goodbye for now. See you.